Have you ever baked a cake? Nothing too fancy, nothing too complicated. You obtain a recipe, follow the instructions, and bake. Voila, the cake is ready to enjoy. Simple? The cake recipe includes specific instructions on the required baking time and temperature. Well, the Federal Reserve has an anti-inflation recipe it's been following, and it consists of one primary ingredient. That's interest rates. However, the Fed's recipe for inflation is not nearly as straightforward. The Fed must use its knowledge and know-how, making an educated guess at the appropriate interest rate level, temperature if you will, and how long it should maintain those rates, time in the oven if you will, so it may achieve the goal of price stability without throwing the economy into a recession. You have to admit it's a fairly tall order. Now, too low a temperature and not enough time in the oven, or too high a temperature and too long in the oven, will not produce the desired results. But in today's post-pandemic, high-deficit, AI-powered world, the correct time and temperature in the oven may have changed. Now, despite a lackluster Q1 GDP, most metrics suggest the economy continues to expand at a solid clip. Job growth is strong, layoffs as measured by time claims for unemployment benefits are low, and consumers are a bit shy about spending on items they desire. But last year's remarkable progress on inflation has stalled. Inflation makes it more challenging for consumers and those on a fixed budget to make ends meet. For investors, the hopes of a series of rate cuts, which helped to power stocks this year, have faded. Hi, if we've not met yet, I'm Tim Gardner, wealth manager and founder of Chatham Retirement Partners. We focus on providing wealth management services to the sandwich generation without all the baloney. If you find this information helpful, feel free to check out the links in the description below to follow or connect with me on LinkedIn, subscribe to my blog or my YouTube channel, or if so inclined, schedule a time to meet. See, last year the Fed often talked about keeping rates higher for longer, as inflation improved and chatter about rate cuts increased. However, inflation no longer follows the Fed's script. Progress is stalled, and in some cases we're witnessing an acceleration. Consequently, expected rate cuts have been delayed and market volatility has risen. What's going on with inflation? Well, it's really a tale of two cities. On one hand, price hikes on consumer goods have ended, according to the Bureau of Labor Statistics, which releases its monthly consumer price index. Prices have fallen as a mucked-up supply chain has unmucked itself. But services, they're what economists call sticky. Price hikes in these sectors have started to accelerate. And here lies the problem. Insurance and healthcare services are more resistant to Fed policy than any other sectors in the economy. It's possible that the recent uptick in inflation is temporary and the road to price stability is bumpier than we had anticipated. Come August or September, we may be having a different conversation. Economic growth is solid, reflecting in more robust corporate profits, which have limited the downside for April. Stocks have an excellent long-term track record, but don't rise in a straight line, and we can expect detours over the short to medium term. According to Yahoo Finance, April's peak-to-trough pullback was modest, barely 5% over the broad-based S&P index. As I have cautioned, taking a more aggressive stance based on market action can lead you down a road that may be too risky for your tastes. But we're also mindful that when stocks hit turbulence, we don't want to shift to a more cautious stance simply based on volatility. Market timing is rarely a profitable strategy. Simply put, you must know when to sell near the top and buy near the bottom. And as of yet, we know of no one who has mastered that concept. For investors with a long-term time horizon, it's not about timing the market, it's time in the market that has historically produced long-term results. I hope you have found this informative. If you have any questions and wish to discuss anything, please don't hesitate to reach out using the links below. Not bad.